Awesome. Hi, everyone. Good morning. Thank you for being here today. What you're about to see is our first Venture Lab pitch competition. And you know, it's really a gathering of people who are willing to build and share in public. And I think that really matters because innovation doesn't really happen in isolation, right? It happens in rooms like this where capital, innovators, partners, and intersect. So for those of you who I haven't met, I'm Jen from SC Ventures. I lead the venture marketing, and my role in isolation in kind of its description sounds somewhat simple, I think, but it is, really challenging, exciting in execution. I work closely with, our venture founders day to day, really helping them to scale from, brand positioning to go to market, thinking about setting them analytics and marketing campaigns to partnerships. And in venture building, I think product is really half the question, right? Distribution and narrative and trust are very difficult to build, especially within financial services. And where credibility isn't optional and patience really isn't a luxury. So at SC Ventures, we don't just incubate ideas. We build ventures designed to reshape ecosystems across digital banking, digital assets, trades and supply chains, and other enablers that are underpinning them. But something I've noticed working closely with founders over the past few years is that the hardest part really isn't just building the product, it's building the right network, right teams around it, access to the right partners, right? So, and right investors, and the long-term institutional commitment. And that actually moves economies and industries because working with institutions, changing institutions and reshaping them is much, much harder, and it's beyond just building products. So, because that's where the real impact happens. So, our client engagement team already runs something called a co-creation circles with our corporate partners. The Venture Lab series is launched to scale that a little bit further into the broader ecosystem here. We started it to share our methodology, provide meaningful support to innovators sitting right here, and play a bigger role in connecting the people and institutions that make all of this happen, and to be in the same room. And personally, this initiative is very close to me because I've been a founder myself. And an event like this, actually, a pitch competition, is how I got my first VC funding. And I know what it's like to be on that side of the table where you're working through iterations of these pitch decks and practicing it over and over, hearing your voice, working on, customer problem until 2 a.m. And, our world has only gotten more complicated. So, sustainable innovation requires institutions to move, and founders often have to now target and focus on multiple segments and multiple stakeholders at the same time. So you need partners who understand both ambition and execution. So Venture Lab is our way of extending the support to innovators beyond our portfolio and into the broader ecosystem in Singapore. So let me tell you who is in the room. Judging today's competition, we have 4 people who bring different but complementary perspectives when it comes to venture, creating investable ventures. We have Harold, our operating member from SC Ventures, and Manav from Plug and Play, Sharmin from who is the CEO of Aereve and a mentor at Accelerate Asia and German Accelerator, and Aakash, who's from Peak XV Partners. So, and then we have our finalist. So these are the teams that made it through a competitive selection process to be here today. Nextvestment, Fineksi, Aereve, COLLYBUS, and yufin. Each of them is building at the intersection of fintech and AI. And each will have the floor shortly to show you why they deserve your attention. To our founders here today, thank you so much for putting yourself forward. I know that takes courage, and we genuinely hope that you take more, you get more value from here today, whether you win or not. So make sure you pick up our leaflet that's at the registration table to learn more about SC Ventures and to learn how to connect with us and work with us in the future. Because that's what this series is all about. That is creating that village. So with that, please join me in welcoming the CEO and founder of SC Ventures, Alex Manson.
Thanks, Jen. Hi, everyone. Good morning. Good morning. Welcome. Some familiar faces, some new faces. That's great. Welcome here. I'm Alex. I set up SC Ventures pretty much exactly 8 years ago. Happy birthday, SC Ventures. That was March 1st. And I'll just take a few minutes to walk through the genesis, what we are, perhaps clarify a few things, and then reversing the order, why are we doing what we're doing, and which leads us to why we're all here today. I'll try and keep it short, but hopefully it's helpful clarifying sort of what is SC Ventures. So I was a banker for a long time, got some gray hair to prove it. And in the course of listening to clients, which is a thing in banking, we were being asked to do certain things that the bank couldn't deliver. It was frustrating me a lot that we could technologically do certain things, but we couldn't do it within the large organization for a variety of reasons, which had nothing to do with bad will or nothing to do with people not wanting to serve clients. It had everything to do, in fact, with business setup, a bit of technology legacy, but this is a variety of very good reasons why it's really hard to change the way you operate when you're within a large established organization. And so the idea came to set up new ventures and try again and build business models from scratch. I pitched this to the boss at the time, who's still the boss, by the way, and he was not amused. His view was, it's the big bang, I got to change. We're not going to waste time, with little things. It's a bit of a distraction. And then I'll try to change the big thing. I should have succeeded, but we failed, and I think we can explain why it doesn't work. However, promised, let us build a few ventures and we will change banking. We call this rewiring the DNA in banking and financial services. In the meantime, we will change banking and the bank with it. And so long story short, we sort of negotiated the setup of SC Ventures, and that's how we set it up as a venture building platform. So predominantly what we do is we build ventures really from scratch. We also have the ability to deploy capital. So we do invest. I just got the question earlier, but we don't invest like a VC or a CVC. That's not our job. We're not trying to be what we're not. Our edge is to use the technology, get to know the teams we work with. So really we invest in the partners we work with in the context of building, in the context of rewiring the DNA, etc. And so when we deploy capital, there's a context for it, as opposed to just it's a good financial investment. And we have entrepreneurs. We obviously organize, orchestrate, community events at times like this one, because that's a huge pipeline. That's how we get exposed to ideas and all this. So we ended up with all three things under the same roof, which is, by the way, described in the book, Nothing Ventured, Nothing Gained, which if you haven't read it, please, and comments welcome or feedback welcome. But that's essentially who we are, what we're doing. Fast forward 8 years, we have built, give or take 30 ventures, 30 companies that are still in existence, so they're the survivors, so to say. Another 20 minority stakes, again, depending on how you count them. So it's grown significantly. And we can see, a bit of a picture, which is, I'm going to call this a barbell approach, which is on the one hand, we have large themes, right? Themes where we know we're onto something and we need to scale the ventures, and they've proven that they have a right to exist. And we're very committed to scaling these themes. And then at the other end of the barbell, we continue to build options. And that's more, they're smaller things for now. They're more nascent ventures, but they're conviction cases where we think we we might find something, and often 5 iterations later and a few pivots and all that, we are onto something. So examples of the latter would be, we're exploring quantum computing at the moment. We're exploring AI applied to education with Lexarius right in front of me, and elsewhere in the room. So a number of more nascent ventures which we're building. And then there's the big themes, right? So we started with digital banking. The bank now operates 2 digital banks. We have a banking as a service business. We're spending a lot of time on agentic wealth. We're spending a lot of time on capabilities associated with digital banking. That's one theme we're scaling. Another theme we're scaling is, I'm going to characterize it broadly as commerce, supply chains, and really the origination of assets with a view to distributing them, be it SME financing, be it consumer financing, be it, very importantly, trade financing, supply chains, etc. So that's the origination of assets with a view to distributing them differently to capital markets is one big thing. And then I'm going to say, overarching all this, digital assets, because we are convinced that we are experiencing a once-in-a-lifetime event, which is the whole financial services industry will look very different in only a few years from now, basically being operated on very different rails. And so you could say that applies to theme 1, theme 2, and everything else in some ways, but think 24/7 liquidity, global liquidity, and all that. So we started with custody, we continued with trading, which got us to payment and settlement. Once we got the infrastructure done, we moved on to yield creation and value creation on a chain, which gets us to tokenization initially of securities, and then of RWA and anything and everything, and obviously there's next steps like prime brokerage and a bunch of things we're building. So that ecosystems in digital assets is an important one which we're committed to scaling as well. So that gives you a bit of an overview of who we are, what we do. I'll just take a step back now, and why did we do this? And I hope I'm going to do it justice. But there's really a few reasons. I'm going to try and summarize it. 3 things. The initial conviction was that it would be impossible to change financial services, build the bits and pieces of financial services of tomorrow from within a large established organization. We had to build it, meaning start from outside. And that was a very important coming. That doesn't mean a large organization doesn't have to change itself. That doesn't mean innovation is not important. That is, not to be taken out of context. What I'm saying is, if you're really going to be transformational, you have to build, right? Conviction number 2 is a number of smaller, at times nascent, initially insignificant, but motivated, purposeful, agile ventures would do a better job than a large organization. And because they have the ability to meander and prove their right to existence and acquire their own customers, and at some point acquire their own funding, and then at some point they plug into each other and they become members of an ecosystem which is infinitely more flexible than a large corporate. And so that organizational construct, to us, while a little messy at times, a little harder to understand, it's on a slide, but difficult to see until it really exists, it is infinitely more powerful in the context of what we're trying to do, which is create the future financial services organization. So that's conviction number 2. And then conviction number 3 is related, but it's a little more personal. It's the conviction that individuals who have conviction in their idea and are incentivized and in fact living and dying by that venture will take us far and much further than employees, corporate executives, technocrats, as good as smart, well-educated and competent as technocrats might be. And there's nothing negative about what I'm saying. I was a technocrat for a very, very long time. But the idea is that conviction in a venture where you're willing to live and die by it is going to get us to a very different place. In our entrepreneur program, when people go through the journey, only a fraction of the journey, I can guarantee that they come out better professionals. And then small subset go all the way, create a venture that becomes commercially viable. And it's super gratifying to see this. But the point is there's an element of personal commitment, development, and that's a very valuable thing. It's the ability to make something happen that wasn't going to happen, right? The ability to create something that wasn't meant to exist is shouldn't be taken for granted, and that's why we're so committed to supporting it, and that's what we'll hear today. So big thank you to, well, first our team for setting this up, partners, so Plug and Play, Elevate, Big 15, and good luck to everyone, and hope it's good fun and productive, and we'll take it from there. Thank you.
Thank you, Alex. So let's jump right in. Each startup is going to have 5 minutes to pitch to the judges and to you guys, and have 3 minutes of Q&A from the judges. So first up is Nextvestment. So please welcome Michael from Nextvestment.
Thank you, Jen. Good morning, everyone. I'm Michael Davis. I'm the founder and CEO of Nextvestment. And today I want to talk to you about financial advice. A financial advisor will try to sell you a product. A good financial advisor will try to sell you a product that's suited for you. But the best financial advisors, they don't even sell financial products. They don't even give financial advice. They give life advice. The problem is today that an advisor is expected to serve 200, 500, nearly 1,000 clients. The math just doesn't work. And for a lot of those clients at the bottom of that list, they know that. So what are they doing? A lot of these clients are not waiting around for financial advice. As with most things these days, they're going to AI. In our own research, more than 60% of respondents now say that they go to an AI tool before they go to a financial advisor, if they go to a financial advisor at all. What's happening is that they're now forming views and intent outside the regulated institutions. This is creating a bit of a problem. For banks that are dealing with financial advice, right? They risk losing pricing power, distribution leverage, and the de facto status that they have in the financial journey. The problem is that institutions are trying to compete with AI using human-only models, and that's just not going to work today. The cost of that gap is $130 billion sitting idle in APAC annually that could be rendered from advisory services. So Nextvestment is the infrastructure layer for institutional client intelligence. We provide clients personalized AI-led conversations that sit within a bank's existing advice and disclosure framework. We capture every question, every behavior, every intent. And we do this within the bank's existing infrastructure in a modular and compliant fashion. This results in a flywheel. As customers use our platform more, we capture every question, every intent, every behavior. We feed that into a client intelligence layer. The client intelligence layer prioritizes opportunities for the relationship manager. The relationship manager can act faster with more context, and the client gets an experience that finally feels personal. The more it's used, the smarter it gets. So let me show you what this looks like. Over here, you might notice my name. I'll be honest, in the last week, especially with everything that's going on, I have checked my portfolio 37 times. The system has flagged this as anxiety, not curiosity. My RM, right, will now be able to interact with me and give me that reassurance that I need, considering everything that's going on. Nikisha is doing some investment research. She's close to making a decision. Benjamin is asking about pre-retirement planning. That's both a risk retention as well as an advice opportunity. What results in this is that RMs have a much more clearer picture of what their clients want, rather than just sorting by how much cash that they have. We're live today with a number of institutions. In Singapore, we're deployed with a regulated wealth platform, and we're seeing 3,000 customers interact with our platform every single day. That results in an 11% conversion ratio. So this isn't a pilot, this is real, this is deployed in an MES-regulated institution. So we've solved the hardest problems first. We are built for regulated environments. We're part of the MES Pathfinder program. We deploy with real institutions. We go to market with top-tier consulting firms, including KPMG and EY. And we have a revenue sharing model that doesn't disintermediate the human advisors. It's designed to increase institutional relevance, not bypass it. A bit about the team. Myself, I'm Michael. I've spent 15 years in financial services at places like DBS as well as Singlife. Annabelle, our CRO, comes from places like Google, EY, as well as Citibank. And Avinash, our CTO, has spent 12 years doing machine learning and artificial intelligence at places like FactSet and Agoda. We feel that the team is very strong to solve this problem. So my time's almost up. And if I was just to leave you with one thought, is that we are not trying to replace financial advisors. We're trying to make every financial advisor the best financial advisor, because they can do one thing that AI should not be doing, which is giving life advice. Thank you very much.
Is this mic working? Sure. Hi, thank you for the presentation.
Thank you.
A quick question. Given the long sales cycles and the deep integration required for legacy systems, how will your solution, shorten or have a shortened strategy? Because by the time you are going, someone else can adopt the same strategy and have something similar in the market.
It's a great question. In the same way that you have different core banking platforms, we see ourselves as the core engagement platform. In the future, we do expect that AI-led conversations is going to be the de facto way to interact with different institutions. So our plan here is to become sort of the shared infrastructure where the banks can just basically come in and bring their data and their expertise and, more importantly, their opinion. That's the key differentiator between all the banks in the future.
Right, so you're saying that even if someone comes into them, they can't replicate what you're doing?
This is a very hard problem to solve. On the surface of it, it might just look like, plug into an API with OpenAI or Claude. But you need to think about from the regulatory perspective, how do you keep track? How do you ensure that each answer across a wide range of 47, 48 different types of investment queries can be handled? And that's a lot of the hard work that we've done. And I think, as Alex mentioned earlier, is that it is not difficult to spin up a prototype or to design something like this, but to do this in sort of a way that you can really trust the system. There is a huge amount of infrastructure and plumbing that sits underneath this, that unfortunately we weren't able to show today. Thank you.
Michael, thank you. Couple of questions related to each other. First, why did you choose to go through the RM versus going direct to the customers? One model could be to directly get people to use the product without going through RM. Second, do those users who actually go through an RM in a bank or work with an RM, do they adopt technology directly, or are they more service-led that they just want to call up, ask people, ask their RM how things are looking?
It's a fair question. It depends. There are different types of clients, as you would know. There will be the DIY investor who is very happy to self-service and is really just looking for the lowest transaction fee or the lowest fee. But there is a bulk of customers which we view as the mass affluent. These are customers who have $100,000 to $1 million in assets. They've got kids, they've got their job to deal with. Some of them are running businesses. Those guys are the ones who don't have the time to go in self-service. They do want to talk to a financial advisor. They will want to talk to someone who can help them manage their money. But the problem is that they're not going to get served by the banks, right? Because the banks will only talk to you if you have 1.5 million, 2.5 million, 5 million. It's not the banks don't want to serve them. It's just, it's not profitable at this stage. So we view this as a hybrid journey. It's not about replacing the financial advisor. It's about giving them the tools to self-service, and the right time, then the human can come in and give them that extra bit of push or support.
Yeah, my question is more, when you go to your potential customer, what resonates more with them, that this will make your RMs more efficient, so that you have better retention, better customer service, or this will get you more new net customers?
Each bank that we talk to does have different strategies. There will be acquisition strategies for new entrants. There will be retention strategies for existing. I think when we speak to a lot of the customers that we speak to today, where they see the most value is that we actually have a clear ROI. It's not just about having a chat bot or a question and answers bot. Everyone can do that. But how do you actually complete the last mile? How do you actually bring the customer in to actually take an action? And those actions could be to take an investment, but it could also be to just have a conversation so you don't go to another bank, or it could be to onboard with new products or to upsell new products. So every bank has a different strategy. We support them in terms of the goal that they are looking to achieve.
I don't know how much time we have, but can you speak a bit more on competition, not only like from other startups, but also internally, because every bank is looking to build their own, and then even more so given this is AI,
yes,
the SLM or LLM you're using versus taking their data, which is a massive
100%.
barrier.
Yeah, no, a great question. So to be honest with you, 12 months ago when we started this, there was a lot of conversations, which is, look, we're just going to build this ourselves. Having spent a lot of time working in a bank, I know how difficult this is. And 12 months later, a lot of those banks have come back to share that it's not just about getting the answer the first time around is easy, but it's about the whole flywheel. How do you take those signals? How do you analyze it? How do you turn it into actual usable insights? The second bit of that is that we have spent a lot of time with the regulators. So we've spent a lot of time with MES to really guide and sort of understand where their thinking is. So we've been invited to a lot of roundtables, a lot of closed door sessions, not just to hear their opinion, but also to give our opinion on where this should head to. Because the reality is that it's still the Wild West right now. Everyone has different ideas, and we think that where our best benefit is sitting outside the institution, being able to experiment, but also understanding the challenges that these institutions have.
Just one last question.
Sure.
Because, what is the revenue model?
So we have two revenue models. One is the standard enterprise license fee, but the model that we prefer is a revenue sharing model. So what we do is that if the institution is more brokerage led, we'll take basis points off their transaction fee, or if they're more advisory led, we'll take basis points off their AUM fee. So it's a win-win situation for both us and the institution. Thank you. Thank you.
Thanks, Michael. Before we bring up our next, Fineksi, I just want to mention that actually from SC Ventures, we'll have Michael Cutler joining us as one of the judges to some unforeseen circumstances. He is actually the head of our AI labs. So if you want to learn more about that, you can catch him after the meeting. But I just wanted to mention that. So next up is Fineksi. Welcome.
Hi everyone. My name is Rico. I'm the co-founder and COO of Fineksi, along with William, the CTO and co-founder of Fineksi. We are revolutionizing credit analysis with AI. In today's fast-paced world, speed and accuracy is a must for any business to grow and survive. And we know that in Southeast Asia alone, there is a $28 billion loss because loan fraud, human error, or subjective credit decisions. I began my career as credit analyst back then, and I know that how painfully that doing the credit analysis for one loan, it could take a week, and it still cannot catch the fraud. That's why we built Fineksi, a cognitive document automation that's not just catch the fraud, but also can reduce the human error by 90%. It also can speed the process 40 times, and it can turn the 10 days job to just 1 hour. Fineksi can assess thousands of pages and build 360-degree borrower risk profile. So the banks or any financial institution can lend with confidence. Our client love it. We have 99% rotation rate. We already growth 6 times in last year, and we have 20% month-on-month growth. And we also achieved 27K MRR this year. And then with just one product, we already achieved 230K ARR right now. And so we are still in track to achieve the 1 million ARR in 2026. Why most credit tech fails bank? Because right now mostly either they are too generic or they are too low in accuracy. So they are just can solve 20% of the problems that the banks have. But we fill the gap for the 80%. We help for doing the financial analysis, the ratio, the flaggings for the anomaly transaction, all of that with 99% accuracy also, and with the better speed. So we are not just better, with 10 times better with our competitors. We already also adopted by many lenders across in Indonesia right now, with from small tier to large tier. The small tier is with plan 300 per month, and then for the large tier is around 3,000 USD per month. This is our vision. We are want to become the credit infrastructure of APAC. Right now, we are build the credit automation, and then the next we will going to expand in the Southeast Asia, and by 2028 we want to build our credit engine so they can assess each industry of in every country. And in 2030, we will become the credit infrastructure of the APAC. This is how our business model works. We charge per page. Right now, we charge $0.1 per page with monthly commitment with around $300 to $3,000 per month. And then in the next future, we also add the revenue model to charge 1% by disbursement, because we will also give the recommendation of yes or no to the banks. Fineksi have a niche market with the big opportunity. Right now, we want to tap the $3 trillion of total loan disbursed in Southeast Asia, and we want to catch the 5% of it, which is $1.6 billion yearly opportunity. This is our team. We have more than 20 years experience. Me, myself, already built the business from 1 to 100. And then our CEO, Yawin, have helped the innovation in lending. And also our CTO, Julian, built the tech service that can manage 800 million AUM. Also our chief commercial, Paramita, that can help us to grow in business. Also, we help with the great advisor we have that already experience in banking and tech for more than 30 years. So join us to be part of the future of AI and digital transformation. Thank you.
Thank you. Couple of quick questions. One, who are the 30 customers who are using you? Maybe the top 1 or 2 you can share. Just
yeah.
And second, what are some questions they ask you when you go pitch them? Because there's a lot of credit AI solutions out there that people are pitching. So like, what are they asking you, and how do they decide to go with you?
Yeah, right now mostly our client come from the like a rural bank, and also we have the big banks like Permata Bank, Hana Bank, Panin Bank. Usually what they are asking right now is the security, because we have some security that the data of the bank cannot be out of the banks, and we have the security that we can show to them that we never ingest their data and we destroy the data based on our configuration. That's why they still want to work with us because this is the real problem they have in their credit analysis team.
Could you go back to the competitive analysis slide? Yeah. Can you shed a bit more light on this? Because, I mean, some of them here are well established and they've been doing it for a while. And I think adding to what Aakash said, there are quite a few of these out there. How do you create that moat or create that differentiation in your product versus theirs?
Yeah. So first, because we all local, so we can know better what the banks want to have in their assessment in Indonesia, and then second, with our technology we are more efficient than our competitors, so we can also compete in the pricing business model when we pitch to them. Actually, we happen doing pitching with all of the bank to Permata Bank, and we win the pitch. Because they already compare the technology, and we are faster when we give the result, and also we are more accurate when it comes to a detail of the transaction, the analysis, and etc.
You're just currently in Indonesia, right?
Yeah, currently in Indonesia, and we are started penetrate Vietnam right now with Shinhan Bank.
So the accuracy of your data depends on training the AI model. As you go into different markets, how will you get the data from the banks?
Okay.
So our technology relies on three things. The first one, the OCR, that is equipped with intelligence, so it can produce more accurate result. And the second one is the NLP, to understand the transaction, so we know the income pattern, the spending behavior, and then the financial analysis. And the third one is the LLM, to produce the human explanation good summary or for the summarization. And other competitor might rely solely on the LLM, which is not quite good for the extraction because they can hallucinate along the way, and also they cannot produce the deterministic financial analysis that is very important for the bank. So our AI is different with the other competitors. So that's why we are more accurate in the result.
None of this is proprietary commercial.
So we use the open source technology and then adopt to our engine. So we can deploy this solution on premise on its institution.
So I just want to go back to one of the first slides. I think you talked about the time taken to process documents manually versus using your system. How do you sell that to your clients? Are you selling it on headcount reduction, sort of reducing of errors? And if so, isn't the human cost of doing this manually far more than your like $300 price point, i.e. are you too cheap?
So every time we pitch to the client, we always mention that they can work faster. So we are not we never give a message like to replace the credit analyst, because the credit analyst can spend time more on the analysis instead of administrative work, like moving around the PDF to the Excel and then to calculate the transaction, etc., etc. So they can process more application and faster and then more accurate. So that's the message that we are usually giving to the client.
The follow-up question was, are you too cheap, charging just 10 cents per page?
Right now, actually not, because we go to the volume. That's why we started right now to target the big banks that can give like 3,000 or 5,000 monthly commitment per month. And right now with our business model, we are already profitable this month. But in the next future, we want to add the others. That's why we want to charge based on disbursement, because we want to also give the suggestion if they accept our suggestion and it failed, we will give like something guarantee like 20 or 30% from the principal.
I would say just flesh this out a bit more, because if you're giving advice, then you might come into regulatory purview as well, and you might have the risk. And also charging per page. Countries like Indonesia, I don't know how many pages per lending file is needed, but it might be 2 or 3 times or even 10 times in another country. So you might have to have either a tiered pricing or change pricing by country or by loan type also.
I see. Yeah, thank you.
Thank you. Right, next up is we have Andre from Aereve. Welcome.
Good morning, everyone. This is Andre Long, co-founder and CEO of Aereve. My company has been bootstrapped 5 years ago. So we have built from scratch to a Reg Tech 100 company globally recognized. We are no ordinary as a startup. We have provided the industry with our patent technology in Reg Tech. So what do we actually do? First of all, there are many solutions out there doing AML KYC. We actually AI KYC enabled with on-chain, off-chain analytics capabilities. And with the geopolitical situation, the war, and also the AI fraud, which created many issues, especially involving multi-language. And I used to be working for WorldCheck 10 years ago. I was the head of North Asia, and many clients came to me about screening of Japanese characters or Arabic characters that have lots of false positive because everything romanized into English. And there's a lot of pain point. And this diagram actually shows you the workshop from the Hong Kong Monetary Authority. So I was one of the workshop leader on behalf of the regulators. So what have we offer? So we first of all started off with getting our patented technologies in handling fuzzy logic of non-Latin characters. And we apply directly into a very familiar process in the traditional regulatory compliance world, namely these kind of areas, like name screening, transaction monitoring, AML testing as part of the supervisory technology, as well as recently we added blockchain analytics that we partner with multiple providers like Crystal Blockchain, Slowmist, etc. So if you think about our namescape, so if I go back to the slide here, we actually would like to have a one-stop shop, which for company like SumSup, Fernango. So this is our target. However, because we're having a hard time competing with the technology giants or even some traditional players like WorldCheck or Dow Jones, so we have to differentiate. So how? We actually spending $1 million bootstrap, rather other players may be spending 10 million. Why? Because we try to penetrate the market by going into tier 1 institution first. So we successfully penetrated Citibank as well as UK Barclays with our AML name screening solutions, and also our GenAI sandbox with the Hong Kong Monetary Authority. And also recently we have converted customer from WorldCheck usage into our name screening from Islamic Bank in Qatar. Given that we actually have very minimal resources, we're able to build clients from 5 different locations. So we are not asking for a market fit to test the market from only the local jurisdiction, but we already have 5 jurisdictions converted. Talk about our teams. My company is founded also by my good friend from Oxford University undergrad mathematics, as well as Thomas Jung. He is also here. He is our Singapore rep and managing partner, coming from Clearstream for many years. For us, our penetration also being standard setter for regulatory compliance in the traditional finance and also the Web3 compliance. So we have been invited by multiple roundtable discussion and even supervisory technology work-led thematic review of sanction screening with different regulators around the world. So how we differentiate from the big players is that we need to penetrate firstly with the Tier 1 institution, including regulators as a supervisory technology. And then we would love to get more VC back to scale up into more logos and even smaller ticket size or other sectors. For example, we already have evidence that we converted client-safe casinos in Philippines because they're under the same regulator in Philippines, and we're able to penetrate. Also recently, we also helped Citibank reduce 80% of the workload in reducing false positive in terms of web analytics using GenAI and our NLP-based physiology multi-language. So all this adds up to differentiate from the big players. So if we really go down to our technology, how we differentiate, this is actually a diagram showing you some of the long Latin characters. So traditionally, it will be translated into the Romanized form here. So Ming and Yu will be very different in the matching, but if in terms of the actual Chinese character, they are very similar. So using our technology, we blended the native match and the Romanization match in the same scoring. So that hugely increased the level of accuracy and false positive reduction. Another thing is that regulator RegTech are very different from SaaS. We are not a tax accounting system. We are targeting for high accuracy. If we have maybe 80% accuracy versus 98% accuracy, we may be reach the appetite for a regulator. Can we actually add another KPI to actually have a faster time to market, to actually maybe able to handle multi-language better, as well as integrated the on-chain, off-chain analytics in the same screening process. So that actually will actually outperform the technology giant where they cannot really change and being agile in providing the holistic analytics. So this is how we differentiate from a lot of big player. And therefore, we got the title of the RegTech 100 company from Fintech Global and also FinCrime Tech 50. And most importantly, also this June, so I will be teaching the central bankers from all over the world in Hong Kong, together with the former CEO of Hong Kong Monetary Authority, Joseph Yam, on setting standard for supervised technology for AML KYC compliance. And so therefore, we are now in the right timing to scale up because we have done a good job in penetrating Tier 1 institutions in multiple jurisdictions. And now we hope to get more partners to be able to set the standard. Rather than winner takes all, we can partner with our peers and also maybe as the top few players to set the standard for the regulatory compliance across the world. Yes, thank you.
So you spoke about various clients, various countries. And firstly, congrats on being bootstrapped and doing so well so far. You spoke about Singapore, Hong Kong, UK, Hong Kong Monetary Authority, Philippines, Qatar, and the languages you're focusing on is Arabic, Chinese, Japanese, Korean, Cyrillic. I don't see a big overlap there. If the focus is Japanese, Chinese, Korean, where are you in that market? So I want to ask you about the focus, because if you're a small bootstrap team, you're going after 5-6 markets. I want to understand your go-to-market strategy.
Okay. So first of all, we converted a client in Qatar, and we have no operation there. So right now, what we want to prove to the investors that our product is not just for where we are locally. So also, we don't need to customize our product too much to able to reach customer from different jurisdictions. This is like what the judge said is very different, right? They're not Chinese character, but Arabics. And the reason being is that because we are very language sensitive, and we're able to show that even for Arabics character in terms of the Romanized Arabics, we're able to match better. but also because of the enhanced KYC which we add on. So, for example, in WorldCheck, they only give you a native name screening, that's it. And we provide you a Gen AI-based web analytics based on Yandex, Baidu, Google, and you can search actually from different jurisdiction search engine. This is actually no solution out there can provide. And we're able to show the compliance manager, if you don't read the language from the original customer, you can actually set the language of what you understand. Without translation, we're using parallel LLM model to give you the analytics. So that actually created a lot more differentiation from a technology giant. Of course, we have more affordable pricing and also our team. But the good thing is that we are on cloud majority at this point. So that's why our support is very seamless and easy. But going forward, we still need to transition with the on-premise, which we need a lot more workforce and investment in human resources, and then we need the VC back. And that's the reason why we're actively talking to VCs all over the world, because we see the market niche, which is unique of our offering, out of a lot of huge competitors that we have. Correct.
So how do you reconcile the risk profile between traditional finance and
Okay. Our clients, for example, some of the virtual asset provider in Hong Kong, and they chose us because we're able to aggregate some of the risk score and also the wallet address attributions. And so we actually integrated Crystal Blockchain, Slowmis, BOC, and also Blockchain Intelligence Group from US. So we give them a more holistic view of, rather than relying on a single vendor, which regulator actually told us that we cannot actually have one solution that covers all the different jurisdictions. So that's why they need to have a very good aggregator to handle this. But of course, many people can aggregate, but the beauty is that we're able to integrate the off-chain and on-chain on the same platform, like a dim sum selection style, and that's make us differentiate the user-friendliness of our solutions. So, and the scoring will be based on aggregation, and the weighting factor can be customized by the user. Thank you.
Thank you so much.
Thank you.
Yeah, next up, we have COLLYBUS. Please welcome Greg and Peter.
Hi. Thanks, everybody. First of all, thanks to SC Ventures for the opportunity to present today, and congratulations to the other finalists. We wish you all the best. COLLYBUS. So imagine capital markets a few years from now. More assets are tokenized, representing over $3 trillion market, and that doesn't include stablecoins. Markets run 24/7. Liquidity moves instantly across global markets. Yet today, the infrastructure isn't set to support that type of model. Liquidity sits fragmented across multiple venues, resulting in a minimum loss yield of around 3 to 4%. Much of today's plumbing was built during the retail phase, well before institutions arrived. Now, as markets evolve, the infrastructure needs to catch up, and that's what COLLYBUS was built for. We are building the regulated infrastructure for institutional access to digital markets. Our team. Now, while not very photogenic, we do have decades of experience in institutional global markets. We've run hedge funds. We've built algorithmic trading solutions within global banks, and we've grown businesses globally within our respective organizations. We understand how institutions work, and we understand what's important to engage and retain the institutional clients. Across these roles, we saw one consistent theme: markets evolve faster than infrastructure. And when that happens, a new layer emerges, a new ecosystem that is required to support that model. And that inflection point is happening again within the digital market space right now. Digital markets, as we know, are entering their institutional phase, bringing new requirements, best execution, transparent compliance, regulated intermediaries, and capital efficiency. But these markets evolve differently. The markets now include specialized exchanges, they include fragmented liquidity providers, and regulated intermediaries, and lacking capital efficiency. Institutions now face a problem. How do we access these markets in a regulated way and operate within this fragmented ecosystem? And that's what's missing today, a neutral, regulated orchestration layer connecting this ecosystem. COLLYBUS provides that neutral orchestration layer. We connect venues, liquidity, execution, and capital across institutional markets by aggregating and normalizing pricing and routing orders through smart algorithms and agents. Institutions can trade, fund, and manage risk from one interface. Clients define their mandate. COLLYBUS orchestrates the market. We turn fragmented markets into unified institutional environment. As we all know, regulation is fast defining and becoming a defining force in digital markets. Exchanges, brokers, order routers, and custody providers are increasingly required to operate within regulated frameworks. Some are preparing for this now, and some have not started that process. We designed COLLYBUS for this from day one. We're already licensed in Australia. We have in-principle approval within Singapore, and we are continuing to build out our regulatory moat by targeting other global jurisdictions. Building this global regulatory footprint takes years and millions of dollars. And it also, but by default, it creates a strong barrier to entry. Institutional FX and digital assets exceed 600 trillion in annual trading volume. As institutions enter, the demand for a regulated interface will surge as well as these volumes. But even 0.1% of current market share represents hundreds of billions in volume. But importantly, our goal isn't to replace markets, it's to empower institutions to operate within them.
Our go-to-market plan is simple. We focus on hedge funds, proprietary firms, and crypto-native institutions, which have about a 6-month lead cycle. We're also in final negotiations with centralized exchanges and liquidity providers to white label our platform for them to put in front of their institutional clients. Further down the track, we look at regional banks, asset managers, and the global financial institutions. And this is all supported by a network of 2,000 existing contacts in the industry. Clients to date include hedge funds, market makers, and brokers. We also have strategic partnership agreements with liquidity venues and infrastructure providers. And these partnership agreements mean that we have faster access to clients, but they also diversify our revenue stream. Our competition typically sits at a number of layers in the stack, and some are very vertically integrated. We feel that one of the issues with vertical integration is that it's harder to excel at every single level. So we want to do what we do best, and that's providing access to fragmented markets. For the rest of the stack, we partner and integrate with other best-of-breed providers, and therefore complete the whole offering. Our business model is simple by design, but highly scalable. We are a capital-light agency brokerage, and that means we don't take principal risk, we don't have any conflicts of interest with clients, and we don't need a large balance sheet. Our fee model is simple. It's percentage of trading volume and assets under management in the brokerage. We also benefit from very, very strong operational leverage. If we had to look at what we want to do, we want to be the access point to digital markets. And we want to orchestrate execution, capital mobility, reporting, and workflows for institutions. And if we look at that, we will sit in the treasury, trade, and risk management functions of these institutions. and really become that core infrastructure layer to access the capital markets of the future. We're looking at our Series A to raise $10 million. That will broaden our regulatory framework, deepen our execution infrastructure, and also scale our distribution. We look at getting that about 18 months runway to break even. And really, if the thesis is that these markets are going to explode and scale very, very quickly, they're going to be fragmented. Value accrues to people who can access those markets. And that's what we do. Thank you.
So you mentioned how you're going after various clients. The majority of the volume and the money lies with the big banks. Until you get there, it's going to be, a rocky road getting there. So what is your plan?
The majority of the volume doesn't lie with the big banks in digital assets.
Okay.
It's all with the centralized exchanges by far. And the majority of that volume is in derivatives, not in spot. So derivatives are probably 10 times the spot volume. And it is all in centralized exchanges. The banks at the moment are actually very, very small in terms of digital assets.
Okay, sorry, I was maybe going for FX trading side, but
oh, sorry, sorry. Yeah.
Yeah, but no, just adding on to what you said, the 2-3 different things you're targeting, on the digital asset side, FX trading. What is for you in the next 2 to 3 years the bigger one to home in on? Because you can't just go after
in terms
others.
of FX or digital markets?
Yeah, various different products that you have.
We see FX as complementary to the clients that we're servicing. So our early clients were ex-FX hedge funds that are now starting digital strategies, but they still have to hedge currency risk, and they've still got currency books. We also see FX as it makes sense for us to include FX for that reason, plus also that's what we've done. So in terms of early adopting for clients, we've got existing clients that are existing contacts of mine and others that trade FX but prefer our GUI and want to trade on that. So what we'll do over time is extend our liquidity provisioning for foreign exchange. We partner with Velocity Trade at the moment as a very comprehensive ECN to provide deep liquidity in FX and precious metals. But yeah, we see FX as very complementary, but certainly what brought us into this business was the fragmented digital markets.
Yes. And that's where the growth is going to be. As things tokenize, that's going to, and we see this, we've seen it before in FX, right? We saw it years ago with fragmented markets, we can see the same thing playing out in digital markets.
Yeah. And the reason I asked is because, the experience you guys have is in FX.
Yeah, absolutely.
And then, you're focusing on digital assets. So that's
yeah, I think as PJ said, we've read this book before. We've seen, we all 25 years ago were writing out clips when FX trades were made, or we were entering in manually. So we can see the fragmentation, we can see the way it's going to evolve, and we see strong parallels between the FX market and the evolution of the FX market and the way that it was brought together by successful organizations. And one of those organizations was my old company that I worked for, 360T. 20 years ago, they became an FX aggregator of liquidity, not a brokerage. And then they with 3% market share 5 years ago, they sold for over $1 billion Singapore dollars. So the scale of the market is important as well, and it means we don't have to be the only one doing this. We just have to be very good at it, which I hope we are.
I'm conscious of time, so just very quickly for clarification, can you go back to the slide? Where do you sit between the crypto natives like Falcon X and TradeFi?
Yeah, good question.
So the way we look at it is we sort of see each of these. So if we look at Falcon X, right, they're very, very vertically integrated. Talos is sort of not so much on the custody side, but sort of where we see ourselves is we sit across the top. We provide the excellence in accessing those markets. We don't want to be a custodian. We're not licensed to be a custodian. We don't want to do all those other things. We want to do what we do really, really well. And then what you do is you bring in, because the technology now makes it much, much easier to integrate other best-of-breed providers and bring those in to basically round out what Falcon X does in one thing. But again, we feel that if you're very vertically integrated, it's much harder to excel at every level, and things get lost.
Yeah, I would also add, and look, Falcon X is obviously something that's very close to us. We're an agency brokerage only. We're not taking proprietary risk. We're not. Our clients will never be concerned about us competing with them or having any conflict of interest. So that's certainly another. And we've got the big focus on regulation. We know that what's holding institutions back from further investment and exposure in digital assets is the lack of regulation, and they want and only will deal with regulated entities.
Thanks.
Thank you. Last up is Yufin. Please come up. Welcome.
Okay, anybody from the Philippines here? Mayong buntag. Good morning. Okay, so nothing about orchestration, hallucination, augmentation. We'll talk about people, money and time, making more money in less time, okay? So what is Yufin? It's a merchant services platform that's making small businesses more money. We make them super women, okay? So what's the business model? Fairly simple. We help them make $200 every month. We make $200 every year from the big companies that are serving them and who need them more. Meet Josie. She is one of our first 5 customers, a small business owner. Now, in the time that you listen to the presentation, the informal money lender, that's not me, I promise, okay? He has taken 300 pesos out of the 1,000 pesos that she made yesterday. 20% interest per month. Every 5th day, she spends half a day going to the wholesaler, ordering blindly, slowly. It's expensive. End of the month, life is worse off. Now imagine 5 million of those small businesses. Yufin is doubling their monthly earning, putting more smiles on small business owners. So it's a pattern that repeats across markets. Tony, where's Tony? BCG. The central bank says there's a 15 billion credit gulf. The banks need aggregators like us to increase the loan book 5 times in 3 years. That's doubling their loan book to the MSME every year. So how do we do it? We grow the incomes for them, bring down their borrowing costs from 20% to 7%, take 10% on commerce, their weekly ordering of supplies. So think of us as embedded financing at the time of ordering, but distribution as a service that taps into their superpowers. We unlock their superpowers because they know what's happening in the community more than Google or Facebook ever will. But why the Philippines? Because it's the third wave. QR code is still expensive, but it's coming up. The informal money lenders, my compatriots, are getting older. They're still charging 20%, but their collection intensity is going down. So you can make a 3% take rate business in the Philippines, and it's repeatable, but you have to start with cash. You can't fight cash. You have to layer digital payments on top of cash. So I have an effective team complementing me. What did I do? I started 15 digital wallets. Any of you used NFC, the mobile contactless? I got that to Asia. I worked at MasterCard doing more of this, and then I said, you know, I spent 20 years helping companies and people spending money and feel good about it. So I'm atoning for my sins now, helping the small business make some more money. So we got recognized by Microsoft, private sector, academia. Yeah, I went to INSEAD. But more importantly, the Philippines government made us headline the Philippine Startup Week in November last year. So we've got 6 services. The core is ordering supplies. We make anywhere between 3% to 30%, but the secret sauce is using their market intel to distribute. What do we distribute? Insurance, content vouchers, and now we are putting a mall at every street corner. So last week, we signed up one of the biggest phone companies, and my merchants are now distributing and selling phones. So unit economics is better because we acquire them outside the wholesaler. So our offline to activation means we have a lower cost to serve. We make around $100 to $200 every month from these relations. And something that I'll show you is super exciting. We're putting technology where it's needed. She doesn't know what to order, right? Now she knows. Because the tech builds the basket for her. She just enters the amount, 5,000 peso. Build me the basket. We'll do it, Deba. And it's done. She makes 20% more profit from the assortment we've recommended. Is the plain vanilla recommendation engine jazzed up for her history, for what's selling at the wholesalers? 2 more areas where she's been spending 30 minutes every day. We cut it down to 3. Uber did that, we did that first. You take a photo of your shopping basket, it builds the basket for you. 90% accuracy, we're getting better. Or you know your customers best. You don't know what's OLED, what AMOLED, how it's a GB. Now you don't need to know. You can sell with confidence because we are putting a mall in every corner shop. And they make commissions, we share it. So we are placed as the natural infrastructure provider for AI for micro and small businesses, and it's a repeating pattern. We are working with POS companies in Taiwan, Indonesia, and India to make that happen. We measure our growth by centimeters. You talk about traction. That, ladies and gentlemen, is $100 revenue for me, for yufin. So we are growing 15% month on month. We're going to break even. Look at this as a Lego block that's replicating. We'll go from 5,000 monthly revenues and some familiar faces, some known names. We are loyal to fintech. So we are taking the 10,000 monthly that we are making, growing that to 100,000 per month in the next 15 to 18 months, and making more superwomen. Embedded financing, layered on commerce, becomes the AI infrastructure for micro and small businesses, and that's yufin.
It's very commendable what you're doing for nano merchants. They really don't have any credit history. So how do you go around, how do you sort of try to measure some of their risk credits?
The best way is to get their weekly spend. I'm in the checkout. I have the item level transaction detail, right? I know what they're buying. I'm also the POS software. I know what they're selling. Secondly, we have a hybrid model. I have field sales ambassadors. So I don't just get their quantitative data, I also get their qualitative data. What time is she opening? Is she open all days of the week? What kind of customers does she get? What are the other people talking about her? So that data becomes the secret sauce. Human intensive, but human-led, tech at the back, tech at the side. So what's happening in some markets, you can actually clone your field sales agents because they do the hunting, their voice AI actually is doing the farming. So where they don't go, you're actually talking in their voice to the shoppers that they engage with.
Like doing the order delivery
No. So I know why that question comes from, because most of you have these full stack B2B commerce providers in your portfolio. Not going to embarrass you there. We work with people who are already doing it. I'm not building warehouses. There's no value there. I'm aggregating, putting the intelligence where I can create financial value. We don't do deliveries. The wholesalers, they saw that the business was growing. They bought the vans and they put our stickers for free. I don't even do any Google advertising. how come with your customer acquisition cost and default rates for these loans? So default rates are low, right? It's not like the peer-to-peer loan in Indonesia, right? Because these friendly people, the field sales ambassadors, are actually the loan agents that they see. It's not the 5'6" like me. I mean, imagine me, 1 feet taller, a little bit burlier, coming to your shop and saying, "Where's my money?" Right? So that is the trust. Second, we're helping them make more money. I'm giving them the means of selling gift cards, content vouchers. They are selling air conditioners at 15% margin, right? They love us.
But see, low or peer-to-peer lending could be as low as 10%. But for others could be as low as 1%. But what do you mean by low?
Lower than 1%, because what are we giving them the loans for? Embedded financing is given to the wholesaler. The more she sells, the more she makes money, the more her capacity to pay us back. And the cost to serve is lower because these physical wholesalers already have the touch points. Now, I just put a kiosk that costs $60. I have one person, a promoter, who's costing me $350 a month, and she is acquiring 200 people in 20 days. Because these are people who are coming out of the wholesaler, who have stood in the queue for 1 hour, who have spent 500 peso to commute in the jeepney, and now I tell her, "Ate, you can get the same goods at a better discount," and the same wholesaler is going to deliver it to you. Now that strikes, right? So that's why the conversion rates are higher. So that's why offline to online works better than just wasting money on Google and Facebook ads.
Well, thank you so much. It's great. So, now the judges will be going into a private room briefly to deliberate. And during that time, obviously please feel free to get up and access the refreshments and this beautiful buffet that we've actually put together. But we want to also share in the meantime a special offer and a special guest speaker that we have today for you. So first, we have a special offer from Lexarius. It's one of our ventures that we built in partnership with INSEAD. They are offering this month free access to their pitch, investor pitch simulator simulation course for any founder or anyone who wants to kind of practice pitching to a real life investor and going through that Q&A, because that's when we really get tripped up, right? You can have the best slides in the world, but their investors are always going to ask challenging questions and push back. So how do you practice in that real life scenario? So I just wanted to quickly show you what it actually looks like. So you go on the module, on the page, you click on the video, you start a conversation with Grace. And sorry, let me just make sure the audio is done correctly. Apologize. There you go. Okay. And while you pitch and the investor listens, Grace, and afterwards she'll ask questions like this.
So you're planning to allocate the funds primarily to product development, followed by partnerships and then geographic expansion. Can you walk me through your unit economics? Specifically, how do you expect your customer acquisition costs to evolve as you scale? And what are the key drivers of your long-term customer lifetime value?
She's actually not shy at all. She'll push back hard and tell you if your answer sucks or it's too vague. And she'll also ask questions like this.
How do you plan to mitigate the risk of increased competition from established players like Wise or even traditional banks who may respond to FlowFi's success by improving their own offerings for small businesses?
So once that's kind of all done, you are able to get kind of your insights, the scoreboard. You can see it gives you a full summary of how investable you are, what your strengths and weaknesses are, what you need to work on. And it's not just about the content of it, the business strategy and that kind of substance, but how you actually handle the objection, right? How you answer the question, because sometimes they ask one question, but what they're looking for is something else. So it really gives you the opportunity to practice in a real life scenario. So I'll have Udaya come up from Lexarius to tell you a little bit more. And right after, we have a special speaker from Joe Liu from HeyMax. Many of you probably know who HeyMax actually is, but he will kind of share his journey about how he built his company that is on a fast path to becoming, I think, one of the key unicorns in this region, and what that experience is like, and share advice with founders and investors. So, but first, let me introduce Udaya from Lexarius. Oh, before I forget, you can email hello@lexarius.com. You can actually catch our Lexarius team today before you leave, or it's also in the booklet, in the leaflet. So if you want to access the course. Sorry.
Thank you. Hey, good morning. My name is Udaya. I am the CTO of Lexarius. So thank you, Jen, for that presentation. So we have a mission of changing behavior. So our mission is to change behaviors at work. We achieve this mission by building programs on top of AI conversational role plays with multicultural, multilingual, and realistic video avatars. Each role play is curated with skills and competence, with feedback that scores your performance and provides guidance on areas that you can improve. We are here today because we would like to extend the pitching role play to all the participants of today's competition. And we would like to offer this to all the startups until end of March. So visit our website, lexarius.com, or email us, hello@lexarius.com. And we are also offering more than pitching. We are more than pitching. Sales, leadership, change management, crisis management, giving feedbacks, managing AI transitions at work. All of these are few of specialized programs which are useful for high growth startups. The advantage, scalability versus ease of use. This just spend 10 to 20 minutes of your day. You can access these courses anywhere from your phone and laptop. And this is not just meant for the management. This is meant for anybody at the organization to be aligned and to develop the capabilities. Right? So visit us, sign up, and we have a live role play which we have kept ready for you at the networking session, so you can try it out. Thank you.
Thank you so much. So next up is Joe Liu from HeyMax. Please welcome Joe.
Thanks. The clicker. Yeah. So if you think this is a victory lap, walk away. This is not the victory lap. I actually use this as an opposite example. So when you think about a typical founder profile, there's a lot of things on the surface, right? You hear about Jensen Huang managing 50 different direct reports, working 4 a.m. to 9 p.m. in the morning. Who else do you think of? Right? Masayoshi-san making billion-dollar decisions in 10 minutes while thinking about a 300-year time frame, right? You hear about Elon Musk, you hear about Jack Dorsey running 2 public companies as CEO at the same time. It's all these things that make founders pretty scared. Like when I look into the mirror and I just see a very average person. So today, my topic is how I personally come from a very point of weakness, of averageness, of wanting to shy away, wanting to hide my own weaknesses, to a point of how I'm accepting it, embracing it, leverage it, at the end, fall in love with it. So, just one picture. So you have, Yeah. So. Yeah. Okay. Okay. Yeah. So, two very quick stories. One is how I want to show you how I'm not supposed to be a founder. So I just want a good life, right? So I trained to be an engineer, as people in where I came from do. I had a good life. For a long while, it was really comfortable. 10 years I spent as engineer at Meta, Facebook, and later called Meta. And that moved me to Singapore, and I had a great life. Every 5 years in Meta, actually, you have a 1-month sabbatical called Recharge. And very faithfully, I took my first sabbatical in November 2022, and this is where I was, exactly, spending 1 month in Japan with my lovely, at that time, 2-year-old daughter. And it was happy. It was like the movie scene. November, fall, the ginkgo tree just turned all yellow. It's all over the golden leaves all over the ground. My daughter had the time of her life, 7 a.m. in the morning, enjoyed the entire playground by herself. It's a time when my phone rings, like friends starting to ask me, am I okay? I was like, well, what happened? I didn't see an earthquake, right, in Japan. As I just 10 days into my month-long trip from Fukuoka to Hokkaido, all the way like 1 month in Japan, exciting, right? And I saw I'd start looking at the news. I was like, oh, Meta just laid off 11,000 employees. So this what hits me is realize that, oh, I got to check on my team. Like, my team in Singapore, okay. And I want to log in. That's kind of strange. I can't log into my internal chat. Then I start looking at my emails. That's where the fateful headline comes in and telling me that, hey, sorry, you're impacted. There's nothing to describe the feeling of, like, the personal feeling it hits you. It's like, what happened? Why us? Why me? Why am I not important? I spent 10 years. This is my identity at the time as a Facebook engineer. And it took me a very long while in Japan. What happened, it's helpful that I have the beautiful scenery in front of me for a while. And I realized that, well, this might be the perfect timing to start a company. Not because the fact that we're brave, we have premeditated plans that we're gonna do amazing things, but it was actually that this caused a very black swan situation that happened where suddenly a bunch of very smart people that deserve to have a really great job, that probably, like me, would have stayed with their golden handcuffs, suddenly had no better options. The job market was terrible at the time. So the first thing is that I realized that being non-brave, being pretty hesitant, being almost like a coward to start my own company, accidentally gave us the perfect timing. That's why in our company, I joke sometimes we have 4 co-founders, probably too many because at the time there was just too many of us, but they're all good people. I thought, like, why don't we give it a try? Like, people who don't like to start a company or just like the idea of start a company probably will leave the team like 6 months, a year down the line. That's totally fine. But unfortunately, now we have the opposite problem, that we have too many co-founders 3 years down the line, still 4 of us. So that's fun story number 1. Second story is how we build now the world's, not just regional, but the world's most well-connected loyalty currency called MaxMiles. And our ecosystem connected one-to-one transferable to 30 airlines and hotels, but this all comes from a very guilty pleasure that I had. Once I walk into a meeting of a very friendly investor, someone you probably know, who's based in Singapore. I'm not gonna name who. He was a very good friend. Long relationship, trying to be helpful. I walked into a meeting pitching what I think this points and miles, ecosystem, why people care about it, why this is a potentially good company, just like what everyone's doing today. Like, I had to do it hundreds of times because I was terrible at doing it. And after very politely hearing him pitch, he just looked at me and was like, Joe, I like you, but if my employee comes to me and say like, hey, I'm spending time optimizing at points a mile to travel better, travel further, I would just have scolded him. It's like, why don't you just work harder? Why don't you work harder, earn more, do better? I will pay you more. Why are you spending time on these very meaningless things? I have no good answer. it is kind of meaningless, right? I spend embarrassing amount of time. This used to be my credit card stack, like 50 of them across Singapore and Hong Kong. We didn't go into building the business knowing that, hey, I'm an expert on that. Like, none of that at all. We initially wanted to do like something about AI for finance or AI for personal finance. So we just thought that we had no idea how to build user empathy. It was like, well, I kind of know the mouse crowd, so why don't we start there? Like, it's very, like, it's a very different story than how people will look at the dots, connecting backwards, like, oh, this is like how I came around to this idea. No, it was like something I didn't even admit to my co-founders I care about that. It was just like out of desperation, we thought that this is the only crowd that we know, so we have to just start somewhere, and then we started there. So what it turns out that the story told me is that the investor, he's probably right. But he's right about people like him, superhumans, who he probably, if he wanted to build for Elon Musk, he probably will succeed better than I am. But very luckily, my averageness of being just a pretty damn average consumer who like guilty pleasure of small things, like who spend stupid amount of time on meaningless stuff, turns out to be a good product empathy that I had. And that brought us today to where we build a product that people like. Airlines started to come in instead of we knocking on the door. Now the airlines come to us. We already have 30 airline hotel relationship globally, including the likes of Cathay, Qatar, and then banks started to work with us too. And there, I realized that me being a very introverted, nerdy technologists walking into partnership meeting, not knowing how to conduct business in the common sense, but just like a fairly excited and very, very passionate engineer who care about this topic, helped me do B2B sales in a very non-traditional ways. How do you convince a banker to take a chance on a product that's not proven, not used by other banks? It's the passion that you have, and it is the dedications, the non-traditionalness that I had. And I had to learn to embrace my own introvertedness, my people-pleasing tendencies, my confrontational avoiding features, to be a feature that I'm happy to share with others, like in this kind of settings. And I'm happy to tell people who I am, who I'm not good at. I'm not good small talkers. I don't particularly like people. I actually admit it in a lot of times. So if you, we recently finished a fundraise by Peak 15, and I want to share with you that, you see this kind of picture, you thought like, oh, this is maybe like a successful YC company doing it. No, I want to tell you, we failed. This is before the YC interview, and this is my first, a while ago. This is after the YC interview. We failed 3 times. We have never been accepted into YC. Like, you would think that this 4 Facebook co-founder, perfect, lots of good AI, oh yeah, believe me, we try to sell all the AI shit in that interview, right? Nothing. I didn't even get a second. They didn't even say the second chance, and 3 times, right? I think it's the mentality of able to accept that, able to then go to, I go to these events, mingle with people, even though I don't like people all the time. I did that, like lots of you know me from like being just this awkward person in SFF with like a giant hat, right? Or in this kind of settings where, I just try to talk to people and build on top of it. It's that little things that compounds to what can be a little bit of a glimpse of success. So I thank the founders here for being here, putting yourself out there, spending the time that I think is the right thing to do. And for the rest of us, if you feel like you're pretty average, you're pretty tired, you can't balance work-life balance, you're not able to spend 12-hour working days every day, just like me, embrace the averageness. Maybe that's your strength of knowing who you're going to serve. Thank you.
Okay, so thank you so much, Joe. The judges are deliberating. They're almost done. So if you want to munch on the food or go get a bathroom break before we announce the winner, please do so. We'll be back in about 2 minutes. All right. So I'm sure everyone is really excited. We had 5 very strong founders, and so thank you again so much for putting yourself out there. Really kind of pitching your heart out, and we really appreciate you and what you're building. So the winner is Nextvestment. Congratulations, Michael. So the judges want to kind of share kind of their quick feedback about why they selected you as a winner.
Yeah, thank you very much for your pitch. I think it's a really good example of giving relationship managers superpowers. So kind of using AI to augment the human-to-human relationship. So when that RM has a conversation with their client, they're both having far more effective conversations. So I think that's a great use case.
For me, I like the aspect of the behavioral, economics, how you sort of like use nudges and try to understand the behavior, because I think that's quite important. It's not just about the algorithms and the financial data.
I thought we chose them because they were the first pitch. No? Okay. No, I think definitely something which is relevant, and we thought it could be easily scaled as well. So yes. Yeah.
Thank you, everyone. Now you can actually go back to refreshment, and I promise I won't interrupt that again. Please network, meet each other, meet new partners, investors, new founders. Thank you so much for being here.